Hey everybody, it's Nick Inman, founder of VolumeProfileTrader.com on Saturday, December 29th, and we just finished our last full week. Well, I guess it wasn't a full week, but we finished our last week in the market for 2012, and it was a roller coaster ride, and I don't think that's really the point. I think the point is where we're going in 2013, and that's what this video is going to cover, kind of give you my opinion on what to look out for, at least for Q1 of 2013. And if you've been watching my videos for any amount of time in the last, say, month or two, you know that I've been looking for sideways consolidation, staying in a general range, waiting for the fiscal cliff. And I think a lot of people can say that, yeah, we've been waiting, but have your trading actions been in sync with that? And I am almost positive that the answer is no, and I'm not sure why, but members know that we've basically been scaling out on the way up, and that was it. And now we only have a small position in Starbucks. That is the only open position that members you should have based off of what we've been doing here at VolumeProfileTrader.com. So we've had a few good trades this month, like U.S. Steel. Shorting the euro, there were probably a couple more. I just can't think of them off the top of my head. But anyways, let's go into what's my outlook for 2013, at least for Q1, and we'll go from there. So, I'm always looking at volume profile and figuring out, okay, where is the volume in this market? And 1403 in the S&P futures. That's your big level, and to see us failing from those levels on Friday was a little discouraging. However, looking at what volume was on Friday, you have to keep it in perspective. So what does that mean? Well, the market sold off based off of Obama saying he's not going to budge on the fiscal cliff thing, whatever. It doesn't really matter. The point is, what's the market going to do? And the market clearly does not like that idea. So we need to go into more detailed levels and figure out, okay, where should we be looking to buy and sell? And I think this market, and this is important, based off of what's going on right now, assuming nothing gets done Sunday with Congress, I think we're in a position where this market's on a sell. And we'll have to wait and see. However, this point of control for the month of November, which was considered a naked point of control, however you want to call it, it's been hit now. And that was kind of your downside target if you were looking for a sell anywhere in December. Now we're touching it, and guess what? We've bounced back 4 points or so off those lows, or off that level. So I want you to keep that in mind. If this level holds, and I do think we overshot a bit to the downside, I do think that this 84, and I guess this is a little subjective, but I do think that this 84, this point of control for November is quote-unquote fair value. And the reason why I say that is because, okay, the president came out, said what he had to say. The markets did what they had to do on Friday. So basically, starting in Globex session, when Congress, reopens their talks, that's kind of your pivot. And you're looking at this 84.50 level, call it 85, 1385. You want to see a move off of that level one way or the other. If we continue to the downside, you'll probably see another 10 points or so immediately. And then you're starting to look at this gap here from back in November. And that's just kind of what we're going off of now. It's a little discouraging that we're falling away from the point of control for the month of December and the 90-day point of control. It is what it is, and we move on. So that's kind of why we've been scaling out into strength, members, was because we don't want to be a part of something like this to the downside. Now, what I've been doing the last couple of weeks, and even the last couple of days, it's been really limited, except for Thursday, was doing a little bit of day trading with the S&P futures. It's worked out, made a little bit of money, but at the end of the day, we're looking for swing trade opportunities. I missed this down move, and I think a lot of people did, but the point is that you're at now a level 1384 where we could place a potential trade, and that's what we're going to be looking at. It's important that we need to go through the other indices just to get a broad gauge. Dow breaking down from the point of control for the year. So the S&P is negative, the Dow's negative, the NASDAQ, I mean, this is just falling out of bed here. This looks like it wants to go test November's lows, value area low for the year. That's key, and that gives you a gauge. I think you can, call it 2640 your stop, about 2%, and your target is about 3% to the downside. So not a great risk reward, but there's probably a few ways to play it. Not necessarily saying that you should go out and short this, but you should expect a potential move down to 25.20 or so on the NASDAQ. The only name that looks halfway decent, and it doesn't even look that good, is the Russell. And the reason why is because it hasn't broken below its point of control for the year yet. One thing to note is we do have lower highs on every single indice for the year. The Russell, the NASDAQ, the Dow, and of course the S&P. So we need to take note of that. We also need to take note of the VIX is really starting to turn up here. I think it did overshoot as well to the upside. Let me get the right chart. And the reason why is because we're at 2272 on the VIX. However, I'm looking at this 50% retracement back in June around 2230, give or take 10 cents or so. And that's kind of my bogey. So similar with the S&P futures, right at that November point of control, the VIX is right at that June point of control. You should expect volatility to increase with uncertainty as we get closer and closer to this fiscal cliff deadline. However, you don't, until we actually go over the cliff, I don't think you rule anything out. And I think that's the important thing is don't necessarily expect a crash on Monday. You wait for the New Year's to pass and then see what the second half of the week has to offer. Surprisingly, I last week I'll say it, I was looking for more upside. We didn't get it, but guess what? Members, we situated ourselves, or we positioned ourselves to not be involved in a potential down move, knowing that there's no advantage to this market right now, and I think that's the main thing. So, we can look at names all you want. Apple, I still think we're at the bottom end of this range. I still think there could be an opportunity somewhere around here. I got long around, actually, just below these levels, 509 on Thursday. Took it for a ride up, to the upside. I took profits on Friday around, it was actually near the highs, which wasn't bad at all. But at the same time, that was it. There was nothing to it. I didn't send out an alert to members because that wasn't really, it was just a short-term bounce, and now there was no meat to it. So when it's something like that, I'm not going to, toot my own horn or anything because it's just a small little trade. All right, copper, we have lower highs and higher highs here, and, it's probably just something that you want to keep your eye on. Lower highs and higher lows, if I said that right, the first time. So we have lower highs, higher lows. Just keep an eye on it. Point of control for the year around 350, and that's that. Natural gas, this was something that I was kind of looking at for potential, continuation to the upside, follow the trend. We're at the bottom end of this range. The top end is, around, 384. The only thing is I do not like playing UNG. So I was looking at other names like Southwestern or Chesapeake. I can't think of any others off the top of my head, and none of those look good, so I'd rather stay away. ExxonMobil and Chevron. So you kind of get my point. Let's stay away from it. Let's just let the market do what it has to do, and we'll catch on when the time's appropriate. And I promise you, there will be a time when the S&P and the entire market's going to be on a killer buy, and you want to be a part of that. If we could get a move, and this is important here, if we could get a move down to 1316 or so on the S&P, or even 1330, between 1330 and 1300, that's where you would love to be a buyer in this market. And the reason why I say that is because that's the last time that this market really went higher. And we want to see that again. We don't necessarily want to see a lower high or a lower low here. So, really your line in the sand is probably the lower end of this range. However, I bet you if the market does get to this chunk of volume here, we do see a monster bounce. Not necessarily saying it's going there, but if we do get there, it's probably going to be worth being a part of. So let's see, silver. This is clearly selling off from the 2-year point of control. Clearly selling off from there. This is something that you don't necessarily want to be a part of right now. Similarly, gold. This looks bad right now, and you just want to pay attention to this. This 1650 level, if we hang around here for much longer, the point of control will shift here, and if you want to be a part of that, you will probably get a trade off of that, so just keep an eye on that. But other than that, pretty lackluster. 60 euro up at the top end of its range, value area high for the year, struggling a bit. Notice, the point of control for the year was at 131 or so, and notice we broke out, we touched those levels. After making new lows, we touched those levels, made a higher low. Oh, right tool for the right job. Here, bear with me one sec. There we go. Right tool for the right job. We get our higher low, and then a continuation to the upside. So, you could even call this a little inverse head and shoulders, where the measured move 2670 up to call it 31. So we got, say, 3.5 points to the upside off of around 31. So 3450 would be your measured move. Whether it gets there, I'm not really sure. I'd be more inclined to, kind of stay away from it, wait for a pullback to the point of control for the year before you would, look for a long there. But I'm not necessarily a currency trader, so I just look at the volume profile. Anyways, dollar continues to bounce off the bottom end of this range. This point of control, what you want to look for is, does the Fed printing 85 billion or however many dollars it is per month, is that going to have effect on the dollar short term? And if it does, then these levels on the S&P, once there's some type of fiscal cliff resolution, is probably a screaming buy, and that's what you want to be paying attention to. So as far as Q1, you wait for the fiscal cliff to do its thing, and then you start looking towards earnings, and you look at those fundamental stories that still make sense, like Starbucks, and you want to be a part of those names on weakness, because overall, over the long term, they have an upside bias, and that's what you want to be a part of. So, anyways, let me do bonds really quick. 30-year, overshot the 200-day a little bit, but we are at the bottom end of this range where we are bouncing. We're at the point of control for the year now. I still think that's a buy on weakness. And the 10-year, let's see if I can get to it. Again, the bottom end of the range, guess what? We bounce. These are the type of trades, these are moneymaker trades. And until they stop working, you continue to go with them. Look, you get a nice little turn on good buying at where support is. That's what you want to be a part of. So, anyways, I hope this helps. Quarter one should be a good one. As far as volatility is concerned, opportunity, that's what I'm looking for, and that's why I've been keeping my powder dry. So, take care. Have a great weekend. Have a great New Year's, and I'll talk to you next time.